welcome to this month's Market Update. I'm joined as always by Alexandra Veroude, Senior Consultant with Frontier Advisors, Capital Markets and Asset Allocation Team. Hi there, Alexandra.
Hi, Wayne.
So let's start today's discussion with equities. Globally, a pretty broadly positive month for equities. I guess off the back of some good economic data, no real escalation in trade tension, and some building optimism around AI, but still some complexity at play, isn't there?
That's correct, Wayne. As you said, global equities did post strong gains in September. We saw US equities were buoyed by solid earnings results and expectation of further monetary easing following the Fed's rate cut. Tech stocks, as you mentioned, performed particularly strong, driven by continued enthusiasm around AI. Japanese equities also delivered solid positive returns, supported by a weak yen and ongoing corporate governance reforms. In Europe, outcomes, however, were more mixed. The UK posted modest gains, while Germany lagged on the back of weak industrial data. In Australia, however, we saw that equities were lower. However, there was some strength in resources, which helped to offset the downturn. We saw that resources were supported by a renewed sharp rise in gold prices and an increase in other key industrial commodity prices. But it was really emerging markets that were the standout performer in September, with the MSCI Emerging Markets Index recording its strongest monthly gain in nearly 2 years. Chinese equities led the rally, supported by its policy settings, strong foreign inflows, and optimism around its domestic tech firms.
Okay, so shifting our gaze from equities to bonds, results a little more mixed there. How have expectations on monetary policy been impacting markets?
So, bond markets, the outcomes were mixed, and this reflects shifting expectations around monetary policy and fiscal sustainability. However, the change in the month we saw was fairly moderate despite the intra-month volatility. US yields rose sharply early in the month, but eased heading into the Fed's policy meeting as expectations on the likelihood of a cut increased. The Fed delivered its expected 25 basis points cut, but yields rose thereafter as Fed officials showcased the lack of clear conviction that rates will be quickly lowered as building inflationary pressures cloud the outlook.
Okay, so that's the US. How about some of the other developed markets?
So we saw European and UK government bond yields, they were broadly flat in the month, and this is despite the ongoing pressure to contain fiscal debt. Japanese government bond yields rose as markets contemplated when rates will be hiked next, as we're seeing inflationary pressures linger despite this government leadership change causing some hesitancy. Australian bond returns were minimal over the month as the RBA remained on hold, with upcoming data set to determine the path of policy ahead.
Okay, so think about currency. Some of the major currencies moving around a little bit during September. What were some of the key drivers behind that?
So we saw moves in currency markets were really reflected diverging monetary policy paths and economic conditions. The Australian dollar appreciated modestly against major currencies, supported by commodity price strength. The Fed's rate cut and softening US labor market data contributed to the US dollar weakness. The yen remained under pressure amid the political instability.
Okay, well, let's maybe round out today's conversation by looking at real assets. What caught your eye with infrastructure and property markets?
So we saw Australian listed property and infrastructure, they posted negative returns, and this was impacted by the broad weakness that we saw in Australian equities. However, global listed infrastructure delivered a positive return, supported by strength in digital infrastructure and power transmission companies. Global listed property also delivered a small positive return. However, concerns around inflation and interest rate uncertainty is still weighing on returns.
So quite a bit happening, certainly an interesting month in September, and I'm sure another interesting month ahead. Thanks for that analysis, Alexandra, and thanks for watching this month's Market Update.